please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, we are holding with some gains, but from the top there is some selling pressure. So select stocks, they're coming for some selling. Every time there's a bit of a bounce, Ambuja Cements is dipping a tad bit. I think ICICI Bank as well. Just remember, just a short while back, we were up nearly around 150 points. So from the top, we have come off a tad bit as well. Just take a look at that. Well, the mid-cap index, by the way, is back in the red. Ashwini Gujral and Rajat Bose, both of them join us. Good day, gentlemen. Ashwini, coming across to you. Sitting with a gain of around 50 points. Good shorting opportunity?
See, what's happened is both yesterday and today, we have gone and retested the 200-day moving average. Yesterday was a narrow range day. Today is also kind of narrow range. So sometimes when you have an extended trend, both uptrend or downtrend, and it goes and makes a couple of narrow range bars, generally, the market has a counter move. So somewhere, I think all this up and down, rally 150, give back some, that is making a sort of a base for the higher move. So the banks, particularly large banks like ICICI, State Bank, are moving up. So that's kind of providing support. But the first signs of positivity are probably coming in the market. And this is the point where I think shorts can be covered and long positions can be taken on Nifty as well as Bank Nifty. We seem to be positioning for a counter move. A counter move which could be tradable maybe 10,270 even till 10,350, 400, because the downside has been fairly sharp. Individual stocks, SBI is a buy with a stop of 245. Target of 270. ICICI Bank is a buy with a stop of 286, target of 302. And Soba Developers is a buy with a stop of 545, target of 570. Now all of this is valid as long as the 200-day moving average holds on. So your risk is basically 50 points, and if it starts to work, you could easily do 150, 200.
All right. Rajat, good afternoon to you as well. What are your trading calls?
I have two trading calls and both are a buy. First of all, my first buy call is on Cox and Kings. I would put a stop loss below 255.25 and the target would be 63.25. Cox and Kings is showing traction and it is likely to move up further. And the other buy call, it has already moved up from the level that I suggested to your research desk at 963. Currently it is at 971, so the stop loss needs to be upgraded to, initially it was 954, but now I would put the stop loss to about 958, and the target would be 981, and above that 985.
Okay, all right, Rajat, thanks so much for joining in and giving us those details. Thanks so much, Ashwini, as well. So Ashwini says that, in fact, the 200 DMA, that's the crucial mark. That should be your stop. But, going by the current trend, you could get nearly around 100 or 150 points on the Nifty. So keep an eye out on that front.
For the market, good going. So, almost about 0.7% higher on for the market. The Sensex now up about 240 points. So let's find out what's happening with individual stocks and sectors. Ekta is here to tell us the latest that's impacting pharma stocks. Ekta.
A lot of the pharma stocks are quite sluggish in trade today, and maybe one of the reports that came overnight from the US is probably impacting stocks a little bit in terms of sentiment. Now, the US FDA chief overnight criticized drug pricing in the US at a conference again, and has criticized pharmacy benefit manufacturers as well as health insurers and drug makers. And this is basically stoked speculation over what steps President Trump might take in order to rein in drug costs. Remember, there was a lot of talk earlier, but post the new chief of the US FDA coming through, there is more proactive steps being taken in terms of faster drug approvals, higher amount of, expedited look into drug regulatory approvals, etc. That has resulted in drug prices coming down in the US. So that's probably one of the reasons that you're seeing a couple of these stocks pressured. Additionally, the USFT chief did mention that patients should not face huge out-of-pocket expenses, obscure profit-taking across the supply chain, which is resulting in higher drug costs. So maybe there is some amount of a sentiment negative or a negative read-through. Separately, IIFL has downgraded Sun Pharma to reduce. They've downgraded the FY 19-20 estimated EPS by 5 and 10%. According to them, one of Sun's dermatology products, Levulin, generated revenue of around 135 million in FY 17, expected to contribute around 7% to consolidated EBITDA in FY 18, could see competition come in. There is another drug, Emulis, which might become a formidable competitor according to IIFL. And there is the patent expiry, which is taking place in mid-2019 for Levulin as well. And hence, you could see incremental competition come in at that point in time. So that's one of the reasons. But maybe there is a multiple set of factors affecting pharma stocks today.
Okay, all right, Ekta, thanks so much for that. Well, let's talk about another big outperformer, Aegis Logistics. That stock has done so well, but it's doing well even in today's trading session. Motilal Oswal, they've initiated coverage on the stock. Manglam's with us to run us through all those details. Manglam, what's the rationale?
The rush there is LPG. That's what Motilal Oswal is betting on. They've initiated coverage on the stock. Interesting because the target price of 303 implies about a 32% upside. And they believe the growth story of the company is intact despite a 25 times rise in the stock price and the company's market cap over the last 1 decade. So that is something we need to watch out for. They believe it's an attractive company as far as India's LPG consumption is concerned. They transport LPG. And they believe their volumes could grow at 51% over the next 3 years CAGR, and that compares with India's LPG import of 22%. So they'll grow much faster than the industry. They expect the company's EBITDA to grow at around 41% CAGR over the next 3 years. So that means a net profit growth of almost 50% plus for the next 3 years on the trot. They value the company at 12 times EV to EBITDA. Believe it's a good play on the LPG sector. Let's see how it pans out. But aggressive expectations. Let's see how the company delivers or not.
Then one stock that was getting a bit of a whack in the last few days, that's moved to the high point of the day, Bharti Infratel. Keep an eye out on that one. And Big Boy, Reliance Industries as well, is holding one end up for the bulls. So just pull up the intraday chart. Bharti Infratel moves higher and Reliance Industries as well, seeing a bit of a bounce back over that 900 odd levels. But moving on then, Budget 2018 tightened PAN requirement for foreign investors. Surbhi's with us to explain us what's going on here. Surbhi, tell us, explain all of this to us.
Nigel, tax can be really interesting. So one was LTCG on the 1st of February. Now, this is the next thing that people are really talking about. Essentially, what the budget fine print tells us is that if you are a foreign fund, an offshore fund, an FPI, you have an India exposure, and if you are doing transactions above 2.5 lakh rupees in a financial year, which most funds would be doing, not just the fund, but those who are running and operating this fund, the board of directors or the trustees, the managing director himself or herself, all of these individuals now need to get an Indian PAN. And it doesn't matter if you're not an India-dedicated fund. You could be an emerging market fund where India is just a small part of your exposure. But as per the Finance Bill 2018, you need to get yourself an Indian PAN. Now, expectedly, this has really riled up people out there. And what I'm given to understand is large FPIs, the larger investors who don't have a pure India exposure, they're saying, why should we get an Indian PAN? Why should the directors of the board, the managing director or the trustees, why should the top officials of the fund have to go through this rigorous requirement? Now, let's see. There are a lot of representations are being made, and the hope is that before the finance bill becomes an act, before it's passed, there is going to be a bit of a watering down, because right now in its current form, it's a very, very wide clause. The clause simply states, and I'll just take 30 seconds to explain this, that every person who is not an individual entering into a transaction above 2.5 lakh rupees is required to get a PAN. This is applicable to all entities, Indian, non-Indian, resident, non-resident. There are no carve-out categories that have been created. So it's a pretty wide blanket rule that could throw up a huge amount of litigation. The investor and the tax community is hoping it will be sorted out before the bill becomes an act.
Pretty market holding on. So let's see what's happening in the commodities space then. We have Tapan Patel of LKP Securities who joins in with some trading ideas. Hi Tapan, good afternoon to you. First up, let's talk about silver. What's your strategy there?
Hi, good afternoon. Yes, I think the market has been steady, especially if we talk about bullion market. So market is currently in the sideways mode and waiting for the clarity from Trump administration regarding the U.S. tariff plan. And we can expect silver prices to trade sideways to down in short term because of the pressure from base metals. Gold prices are trading firm, awaiting the clarity from U.S. data also. So we can expect silver to trade down, and 38,850 to 900 is a good selling range with the stop loss about 39,000, and the downside target should be around 38,600.
All right, Tapan, you're telling us about silver, but what about copper, crude? You have a strategy there?
Yes, if we talk about energy complex, then I think crude can be a short-term sell. And the main reason is U.S. Production levels. So if you see the last report, then U.S. production is at a record level, and that can pressure the OPEC compliance of the production cut of that OPEC compliance. So we can expect selling in crude prices around 3990 with a stop loss about 4030, and downside target should be 3920.
All right, Tapan, thanks very much for joining in with your trading ideas. Well, for the market, we've come off a tad actually, so now just holding up with a gain of about 0.5%. There are some comments coming through from Mehul Choksi. This, I believe, is what he has told the CBI, that he's being threatened by individuals, various political parties, he says, are politicizing this to their advantage. And a lot more. So let's see what more there is. We'll just try and get in some more details on this. I think this is his reply to the CBI notice, actually. But impossible for me to travel to India.
Yeah,
so yeah, I guess for the, if one were to express their intention to return, I'm sure the provisions would be made.
Absolutely, yeah. But I think, Sumaira, the broader scheme of things, the markets we're talking about, yes, we're seeing a bit of a bounce today. But stocks that investors have decided to sell, they're continuing to sell it. Balrampur Chini, now it's down 11%. When we started off the show, it was down 9%. It's already seen such a sharp knock in the last few days. People are just selling out on that one. REC, take a look at that stock. For this week itself, I think it's lost roughly around 10%. That as well has moved to the low point of the day. And a couple of other stocks, I think Andhra Bank, Bank of India, they as well are seeing some selling pressure. And that explains why the mid-cap index is trading in the red. But that's it from me and Sumaira. Then on Halftime Report, you stay with us. At least the Nifty is holding on with a gain of around 50 points. We'll wrap up on the show. Business Lunch comes up next. But as we do that, we give you a glimpse of the women behind the scenes who make this show a success on a day-to-day basis.